So now we're on to the outlook for the global economy and Australian tourism. Are the global economic conditions right for the continued growth of inbound tourism to Australia? And how dramatically does the outlook change across different markets? Felicity Emmett is responsible for the analysis and forecasting of key Australian macroeconomic indicators, as well as thematic research on the Australian economy. Felicity has more than 20 years' experience as an economist in financial markets, and we're thrilled to have her here today. Can you please welcome a senior economist from ANZ, Felicity Emmett. Felicity.
Thanks, Georgie, and thank you, everyone. It's always nice to be in Melbourne. To continue the theme on dispersal, I'm actually from Sydney, but it is always fabulous to come to Melbourne. So the title of my speech today, once I get my cue here and get it working, is, oh, there we go, Leveraging Strong Global Growth and Structural Tailwinds. And so I'm going to talk about two themes that are relevant for the outlook. Now, one is that we are seeing... There we go. We are seeing around the globe a cyclical upswing in growth, particularly in the Western advanced economies. Now, this has been a very long, slow expansion post the global financial crisis, but we are now seeing a synchronised growth across the world. And this cyclical upswing is something that will help to generate further tourism flows for Australia. But the other theme I'd like to develop today is around the structural tailwinds, more around countries in Asia, particularly the smaller economies. And I was particularly excited to hear John talk about the prospects for India, because I think it's these markets that are actually smaller at the moment for Australia, but we're seeing much stronger growth. And I think that's where we have enormous long-term potential in Australia for tourism growth. So this chart here shows a map of the world, and it's colour-coded for growth. So if economy is growing in real terms, then it's coloured blue. So you can see across the world, we're seeing growth in nearly all economies, apart from just a couple of small ones there. The darker the blue, the stronger the growth. So you see this very strong growth that was coming out of Asia in particular, which clearly Australia's leveraged into. So 2017, we saw quite a significant pickup in global growth from 3.2 to 3.8%. But alongside that, we saw a broadening. So more and more economies are now recovering, now growing quite strongly. And this is quite important. It's important for Australia because it means that household incomes around the world are starting to rise, and it will help to drive demand for all of our trade, including for our services and our tourism. What's missing though, and this is something that we probably find it hard to realise how it's relevant, but what's missing around the world is inflation. And this is why we're seeing interest rates are very low still in many economies. We've started to see a rise in the US, but we're still in Australia, interest rates are very low, in Europe, in Japan. And that's because inflation's very low. So this chart here shows inflation compared to central bank targets. And apart from the UK, where they've had a falling currency as a result of the concerns around Brexit, nearly all central banks around the world are missing their inflation targets. And that's why they're keeping policy very loose at the moment. And this is a huge concern for policymakers around the world. And there's been a puzzle as to why this has been the case. The key driver for that weak inflation has been wages growth, weak wages around the world. This chart here shows unemployment in the top 7 economies. That's the blue line. It's inverted on the right-hand scale. So as it rises, it means that unemployment's falling against growth in wages. So you can see there that wages growth remains quite low compared to where it should be compared to the unemployment rate. And this is a break from tradition. It's something that is puzzling economists around the world. There's a number of factors that are driving this: the interaction of technology and globalisation, the increasing concentration of businesses, and the fact that there is still a bit of labour market slack in some economies. But what this means, and how this is relevant for Australia, is that this is a constraint on growth in household incomes in all economies around the world. And it's household income growth that will drive that, that increase in spending on consumption, on tourism. And that's why, in a way, this is a challenge, but it's also an opportunity, because I think eventually the laws of supply and demand will come together and we will see a pickup in wages. And I think that suggests that there is more potential out of these established markets over the next few years as that comes through. Now, this chart shows the numbers from the tourism spending. I've just got visitor numbers in there at the holiday leisure travel at the moment. So you can see the level compared to the year ago and see the strong growth. We all know that China is the largest market, the UK and the US following a little way behind. But what I've done there is the percentages at the end of some of those bars show the growth, the average annual growth over the past couple of years, just for people coming for holidays or to visit family and friends. So you see we're getting very strong growth out of China, as is well known. The US, the expansion in the US is quite mature. They're having their second longest expansion on record, and it has unemployment is at nearly a 20-year low. So it's very strong growth. That's average annual growth, 19% over the past couple of years. The same out of Japan. Japan has had quite a long expansion, as I'll talk about shortly. We're seeing very strong growth there from these traditional markets, advanced economies. But when we look down to the smaller economies, we're also seeing very strong growth, particularly from India and from the ASEAN countries. And it's there that I see that there is quite significant long-term potential for Australian tourism. So I'll just now talk about a few of the particular markets and what the prospects are there. So if we look at the US, this is the unemployment rate. And I think of the unemployment rate as being the best summary indicator for the health of an economy. And when you look there, you can see it's at 4.1%, the lowest since the early 2000s when we had the tech boom. The economy there is in incredibly good shape, and we've just had this enormous fiscal stimulus that will help to drive further investment. It will help, the income tax cuts will help household incomes, particularly at the high and middle to high end, which is where we're looking at tourism markets. So I think the US economy is in great shape, and that we're likely to see further growth from that established market. The next one I'll talk about is Europe. So the chart that I have here is GDP growth along with individual PMIs for Germany and France. PMI is a purchasing manager index. It's like a business condition, has a very nice leading relationship with GDP, and suggests that growth in Europe is likely to continue to be quite strong. Now, it is expanding, the strength is broadening through Europe, and it's interesting, I didn't have the numbers up, but we're seeing quite strong growth out of some of the European markets now. You know, whereas while the US has been growing for a while, just the last couple of years we're starting to see growth out of the smaller European countries, Belgium, Switzerland and France as well. Quite strong growth emerging there. So I think in terms of this cyclical upswing, there is quite significant potential from Europe in the next few years. The other one is Japan, the 5th largest tourism market. And again, second longest expansion since World War II. Very strong growth for Japan. Its unemployment rate as well is at its lowest in a couple of decades. So its economy is doing very well. Arrivals or spending from Japan has grown on average 22% over each of the past couple of years. So another very strong market. The thing about Japan is that, as many of us know, is that it has a falling population. It's the same situation in much of Europe, and in America the population is growing quite strongly. This is a characteristic of advanced economies. So the middle class, which is what you're sort of targeting for tourism spending, is essentially stagnant in those economies. We can address issues around market share and things like that to attract more visitors from those markets. But in terms of the size of the overall market, we will get cyclical upswings and downswings from these advanced economies, but we won't get the same sort of long-term growth that is in offer from the Asian economies. So China is obviously a big example of this, and we've seen this over the past 10 years or so. Now this chart shows the increase in nominal GDP every year. So you can see there in 1992, China added the equivalent of the whole Nigerian economy. In 2002, the equivalent of the Polish economy. Last year's growth was the addition to growth was the same as the whole of the Canadian economy. So even though in China we're seeing actually on average a slowdown in growth, so growth levels were around 10% or so on average through much of the last decade, they're slowing now to around 6.5%, and they'll continue to slow as that economy transitions away from infrastructure and investment-led growth towards more consumer growth. So that means that while the economy might be growing on average around 6.5%, consumer spending is growing at about 10%. So that's why China remains a very important market, and the middle class there as well is growing very strongly. The upper middle class particularly strongly, and this is where there will continue to be enormous opportunities over the next few years. In India as well, India is a much smaller market, but this chart here shows GDP per capita as a percent of advanced economies. You see China up there around 33%, Indonesia around 25%, and India down there at 50% of advanced economies' GDP. And this chart, I think, just shows the enormous potential that we have from India. When you think China has 1.4 billion people in its economy, India has 1.3, so just a little bit smaller in terms of population. It also has a much younger population. It has much stronger population growth. So the potential from that Indian market is enormous over the next 10 to 20 years. And I think this is something that really Australia needs to leverage into this sort of growth. The story is similar for the ASEAN region. Now, the ASEAN is a group of about 10 countries, but the countries that I'm talking about here, where the opportunities are the ones where there, again, is quite a young population and the economy has enormous potential. So Singapore, for example, is one of the ASEAN countries, but it is really like an advanced economy. It doesn't have that same population, that demographic dividend that's going to come through in the next 10 or 20 years. But when we look at countries like the Philippines, Vietnam, Indonesia, and Thailand, they have young populations. They have enormous potential for growth in the middle class there that will drive spending on services, spending on tourism. And these markets are likely to be very important going forward. So I think this rising middle class story is a really important structural tailwind for Australia. So the Brookings Institute estimates around 140 million people are added to the middle class every year. In Australia, we've got 20-something million. So these are all potential customers. And the overwhelming majority of them are in Asia. So this, again, we have this geographic proximity that provides Australia with a significant advantage here. And I think this is where the opportunities will lie. I'll just mention as well the exchange rate and also just highlight how important tourism is for the Australian economy. So this chart here needs a bit of explaining. The blue lines are the contribution to growth from our net exports of services. So within our exports of services, they're made up of, apart from tourism, there's education and there's some business services as well. And our imports of services are largely Australians travelling overseas. So essentially, this is the money spent by international tourists and students coming to Australia, less what Australians spend overseas. And this is the contribution to growth. And I've charted it there against the Australian dollar. That's the orange line. And it's inverted on the right-hand axis. So as the line goes up, it means the dollar's falling. And you can see how important the currency can be for tourism and services spending. So through the period up until about early 2014, from 2010, we had a significant subtraction coming from net services. So the dollar was very high, people were travelling overseas a lot more, spending a lot more overseas, and fewer people were coming to Australia. Since then, we've had quite a significant depreciation of the dollar, and that has totally turned that around. And through the last few years, we've had on average a contribution to growth of about 0.5 percentage point every year coming from net exports of services. So, growth has been around 2.5% for the past few years. So, just under a quarter of that is coming from this services spend, of which tourism is a big part. So it has been very important for Australian growth, but also the dollar does affect the outcomes there. And that's something that we are actually relatively positive on. We're expecting a further depreciation in the dollar over the next year, down to 72 cents by the end of this year and 70 cents by the end of next year. So that should help to continue to support that contribution from international tourism. So this is my last slide today, and I think the outlook is very positive. We've got this, we can take the opportunities to gain market share in traditional markets and also leverage from this cyclical upswing that we're seeing around in the advanced economies. I think we always, as an economist, you always want to look at the risks to the outlook, and forecasting is a very fraught sort of area, but so we do want to look at the risks. And one of the risks clearly at the moment are the implications of a potential trade war. We're seeing protectionist measures ramp up, not just in the US, but clearly the US is the centre of of the increasing protectionist sentiment. And if that does escalate into a trade war, economies like China and the other economies in Asia will be much more affected than some other economies, and that's where we are leveraged into. So this is a concern for Australia. Obviously, the Aussie dollar plays a part, as I just showed. Now, forecasting the Aussie dollar is very fraught. There are forecasters out there saying it's going to 85 cents over the next year. So if we did see a substantial appreciation in the currency, then that would clearly have an impact on spending, on people's decisions to come to Australia, and then also how much they spend once they're here. The other thing to be concerned about always is some sort of unexpected step down in growth in China. China, as you can see, as you know, is the biggest market. It has been growing very strongly, but it does have its vulnerabilities. It's got a very high level of debt, and any sort of misstep by policymakers there could see quite serious repercussions through their financial system and then through into economic growth. So there are some risks there, but our central case is that economic growth continues to be quite solid for the next couple of years through the world. But I think really for tourism, it's really, the challenge really is going to be capturing that burgeoning middle class in the Asian region. That is really going to be the biggest opportunity for the medium to long term. Thank you.
Thanks so much, Felicity, for that.
Pleasure.
That was great.
Pleasure.
Let's open it up quickly for some questions before we're going to have our morning tea break. Who's got some questions for Felicity? I've got a really simplistic question. Feels like a dumb question.
No, this is never a dumb question.
That's what I try and say to people, never a dumb question. So the effect of, I know this is going to sound really general, but what do you think the effect of Brexit and Trump are going to be on people coming to Australia? Will that affect the tourism market here?
Yes, look, I think it's very difficult. I think Brexit, for example, is probably, unless it has an economic impact, which, to be honest, the economic impact has been a lot less than expected so far. Everyone was predicting recession in the UK if the vote was to leave, and that hasn't been the case, and actually the UK economy has been relatively strong. But it's that isolationist move that we're seeing increase. We're seeing this in Europe over the past few years and the elections there, where there's this move away from centrist open policies towards more isolationism. And that's what we're seeing with Trump. He wants not to be part of NAFTA. He doesn't want to be part of so much of free trade. And I think that means lower global growth. And Australia is very much exposed to that, and it means lower growth for the big export-oriented economies of China and Asia. And that's why, as I said, you know, the trade story, and if we do see an escalation of the trade war, that will be bad news for everyone. So it's, yeah.
More questions for Felicity? Well, you've stumped them all with the figures there, Felicity. No? If you had to choose, because sometimes you can't be all things in a business, and when you have a business you only have so many resources, and a lot of people here, the reality is there's so much work to do, and we're hearing today that you need to do more to bring more people in. If you had to choose between a market, the India market or the China market, what would you pick in terms of pure numbers and what you think would work more if I was a business trying to attract those two?
Well, you know, all economists, we say it depends. So I think in the near term, the size of the Chinese market and the still near-term potential for quite strong growth means that if you don't focus on that market, you will miss out. But I think if you are in this game for the long term, for the next 10 or 15 years, I think India is where you are going to see the stronger growth, and that's where you'll see more growth in arrivals and in spending coming through as that middle class increases.
It's fascinating. Can you please thank Felicity, everyone? Thanks so much, Felicity.
Thanks, Georgie.
Thank you. So just to quickly wrap up this morning, It's really been about setting the scene. Minister Chobo announced a very exciting $12 million boost for business events unit, which is great. John outlined Tourism Australia's strategic approach to tap into high-yield markets that keep spend increasing. And as we just heard, Felicity shown us the opportunity from an economic point of view. So coming back, we're going to have a little break now, but we're going to delve into how to reach the right consumer, which I think we're all going to get something out of, and how to create meaningful connections with them. The room's tiny bit chilly, we've noticed. But you know what? It keeps you awake. I remember Letterman used to always have his studio audience at about 14 degrees, so he kept everyone awake so they'd laugh at his jokes. Because if it's too warm, you start to go to sleep. But no, we have noted that, so we'll warm the room up a little bit. We have some feedback forms on the table, and you all know, being in the tourism industry, that feedback's so important. So if you're sitting here thinking, yeah, you know, I liked this, didn't like that, we can't do anything about it unless you give us feedback. So if you could please, maybe even now, tick along and sort of as you go, because at the end of the day, you just want to get the hell out of here and go and have a drink, so you're never going to do it then. So my old ex-school teacher advice is tick some boxes now and get it done, and then I'll nag you again mid-afternoon to keep going, because we'd really love some feedback to make this event bigger and better each year. And I'm noticing some people might be really comfortable standing around the sides, and that's great, and I don't mean to embarrass you, the whole room will look at you now, but we have heaps of seats up the front here that haven't been taken, so if you'd like a seat after morning tea, and it's not allocated seating, so it's first in, best dress. So now go and have fun. We need you to be back here. We're going to be kicking off again at 11:25, so if you can be back here, but enjoy morning tea. Thanks, guys.